Good afternoon, all. This is Fadi Hamzi. It's about 5:11 p.m. on December 14th, 2022. It's the third Wednesday, our usual Wednesday meetings. I'll try to talk with a better accent. There's some fellow wrote on the YouTube channel that he loves the content, but he cannot understand what I'm saying. I can't understand how would you understand the content if you're not listening to me, because Chuck, I'm not going to tell you the story. You got to see the interpretation of the chart. But anyhow, interesting colorful comment there. That's okay. Well, we're 1,500 plus strong on YouTube, so, and nobody has complained so far, but this fellow plenty has the issue. So I'll try to speak with a different accent. How's that? All right. Very quickly, we're gonna have a special guest for you today. I don't see him here. Nancy, you want to give him a heads up? Uh, uh, Mark Esposito, who's one of our dear friends and also contributor and involved with the website, has teamed up with Larry McMillan, the high priest of our options business, to do some special inventory. And that's because he's had such a huge career at Stiebel, 27 years there, and as a DPM, designated primary market maker. Anyway, he's going to come in today. We're going to open something small for him called Options Corner. Once a month, twice a month, we're going to do that under some auspices, the weekly market time. But he'll take some questions. He'll talk a little bit about what they're doing. And I'm not involved with Larry. Larry's a good friend, but we're not involved. He did endorse my book. I appreciate that. I've learned a lot from Larry, but that's Macmillan Analysis Corporation out of New Jersey. But that's something Mark is doing on the side. I'll tell him, listen, I'll give you some exposure. No biggie. Especially not just in the chat room, but longer term on the YouTube, the channel, the video itself. That's where the volume is. And so people really understand what you're doing. And I sent I think, an email out to everybody the other day. And we probably have a little bit better web stuff from them, from Macmillan Analysis Group, MAC, MAC. Later on, we'll share that with you too. But that's our content. That's our intent, to provide that additional content for you. Okay. But do bring your questions. I learned a lot from Mark. I thought I knew a little bit about options. From LA, UCLA is the graduate school management there. AGSF is the second derivative school in the country, options and futures, after U of Chicago moved to school. I thought I knew a little bit. I found that once I met Mark, I found that I was teaching by then. I was teaching at Stiebel when he came in. I learned after working with Mark and learning and talking to him that on the practical side, I was just an academician. I knew very little. It's the practical side that gives you that edge. And I learned a lot from him. He's actually mentored me. And you could be sure that his knowledge is terrific. His background is impressive. And of course, he did 12 years at One Chicago, which was single stock futures. So he really understands both sides of the coin in the derivative world. Okay. And sometimes I have to take notes. That's how good he is. Yeah, you don't even find in the books what he's saying. That's all what really happens on the floor and in the streets of Chicago, where these large trades come and go, and so on and so forth. So one of the first guys I knew that he could do the payoff curve in his head. Okay, the payoff curve in his head. You know what the payoff curve is, right? We have a long call, so you draw it. Long put, you draw it. But what's the price? What's the payoff? Well, what if it's a back spread? What if it's iron condor? All that. He just does it by looking at it. Hold on one second. I'm sorry. Hello? I'm in the middle of a webinar. Who is this? What's your name again? You're with who? AAA.
AAA, yes.
What, you mean
Your
triple?
roadside, your roadside.
No, okay, wrong time. I'm middle of a webinar. We have to talk later. Call me back in an hour.
Yes.
Call me in an hour. Same person, different company. Yeah, wrong company. Yeah, they're gonna have call me later. Sorry, they're clueless. So anyhow, I'm sorry. I'm middle of a webinar. Anyhow, so when she said my first name, I thought it was the person I'm looking for, but no. Anyhow, so bottom line is, he'll be useful. He'll be helpful. He knows a lot. Sometimes he does things a little bit more convoluted, but that's what these pros do. So good source. He'll be joining us a little bit later on. Nancy, could you check to see where he is? Or Cash? Hey, see, I'm not telling you. So that we could bring him in and blend it in what we're talking about here. Oh, there he is. Hey, Mark, how are you? Hold on. Okay, Mark, let me do this. Let me put you in right before the charts. Okay, Mark? Make sure your audio works. Yeah, make sure your headset works, and then we'll do it after I've done the econ calendar. All right. So before I get to charts, you can do this, and then I'll finish with the charts. Fair enough. All right. So we had our FOMC today. It's usually the most active day of the month. It's the last one for the year. On the calendar, also we have a big day tomorrow. I suspect after that things cool down. The rest of the year, I'm moving actually by end of the month. Always every time I move, I usually say at this time of year, I need a bigger place, and what I'm getting is a fiber optics throughout the house, so it should be very good. And Pico has a backyard, so can't complain. And it's brand new AC. I'm not repeating the mistakes of the past. These older places, you don't know what you're getting into. So, all right, retail sales tomorrow is going to be big. Not crazy about business inventories, but also industrial production, the red reports. Philly Fed, and of course, jobless claims. I suspect jobless claims tomorrow is going to be big because of the time it takes to report, especially the high-tech companies who are laying off. I think it's going to be a bigger number here, much bigger than people think. But that should be priced in. I mean, the smart play probably has it priced in. Retail sales, let's see what we have on retail sales. Just give us a clue about the holidays. And 1.3 negative 0.2. Okay. That's prior month to month. This is negative for this report. And then you got a decent range there, so we'll see. X vehicles is also plus 0.2. And gas, negative 0.1. Okay. So this is going to be big tomorrow. It's 8:30. If you want to be trading it, you should be trading afterward, not before. Don't try to guess the number. Don't try to be economist. Most economists I know are very poor. Trade what you see, not what you think. Okay? And so, and then let's see what we have for industrial production. And then we have PMI composite on Friday. Let's see what this is. Hold on. 0.1 plus on the consensus. It's negative 1. Okay, so we're going to pick up a little bit of industrial production, but not the output. That's interesting. Okay. And cap utilization is going to be somewhere in that area near 80%. Okay. But you don't want this thing too high, because then you're hitting inflation issues. Now, I'm not an econ major. Although I took quite a bit, but not econ major per se. But I know enough to be a little bit dangerous. I was privileged to know about Burton Malkiel, the one who wrote Random Walk down Wall Street, which is a must read for most of you. Okay, the PMI composite, this is purchasing managers. And you want to be above 50. And we're still not there. Okay. Yeah, we're still not there. Maybe we're inching up, but we're not there yet. Okay. Or maybe we'll exceed the range, but the range does not include 50, so it's going to be interesting. I think that slowly the interest rate pressures will get to the economy. Just shape of things to come. It's just not there yet. So, and I think that's what market is rallying now. Remember, market discounts in advance. Hey, Michael, how are you? In advance, so it was a sell in February. Remember we went short? Yeah. We took 11 trades back to back as winners. Yeah. And now there was one or two long in there because we were overdone. It was still up like 16,000 points on the Dow. Now then we got bumpy and we lost a couple of trades. We still short, but I'm getting ready to cover it. So what do we have? Because I think there's a question that come up. Are we going to be heading up? I think so. Especially with action today, but you could see what happened these 2 days. So maybe by tomorrow night I have to cover, take the little win we have or no win, whatever that is. Remember, data is killing us a little bit. Next week is expiration for those. That's why this week was chosen. And I'll get into that once we get into the PMT part, but let me log in for a second before I forget it. Here's what I'm talking about. Okay. Do not get into this trade. It's too late. Notice we're posting every changes we're doing. We did raise our stop, but we're not there. Okay. Yeah. Let me see. Make sure I'm right. No, we did not hit. Oh, maybe we did. No, hold on. Maybe we did. Hold on. Maybe we did. Hold on. Because we did change it. I'm back. Yeah, we got hit then. Okay, we got hit. All right. Sorry. We got hit. We were high up there at 41.50. Yeah. We dropped it, and then of course we had a big pop. Right. We're stopped out. So we don't have a position here. We're still short the time of digest, but that's the option trade. These are chaotic times. You got Fed, you got election time, and you got inflation. Now that you always have Fed, but now we have after 40 years of inflation. That's a two different type of problem. So, but here's not what I was going to talk about was actually this expiry. Expiry is 23rd, so it's next week. This was designed. Remember, tomorrow. I'm saying this Friday, Thursday is an option expiration, futures expiration. It's a quarterly expiration, so at the end of the year also. So we rolled on Sunday. We rolled to the March contracts for our futures. That's what CME instructions are now. That Sunday night they roll. So Monday morning we will trade M23s. I'm sorry, yes, no, H22s, March contracts. But the Z contract, Z22s will expire this Friday. We picked the 23rd by design, this 23rd, so that we're not having fade and decay here throughout throughout the FOMC. Okay, and so far it's done okay, except we took this, we dropped our stop was a little bit higher. We raised it first and then we dropped it. This was premature. It was going our way. I wanted to have less of a loss. So we're out, but it is what it is. So there you go. One trade does not make you or break you. What you see here is 170 trades. So that should be also your trading. One day, somebody calls me crying, I made a mistake. Nah. Do not worry about one day. You're getting 3 or 4 days in a row with the same thing, yeah, you got a problem. Maybe you should be calling Uber. Yeah. But one day doesn't make you or break you. So just don't lose your marbles, yeah, so to speak. Keep putting it in perspective. So anyhow. So we're going to get into charts. We went over the econ calendar here. Again, this is going to be the biggest day we have going forward, because also you have a bias from the Fed. Normally, FOMC gets reversed the next day. Normally, okay. There's nothing normal about this market, so I gotta give you that caveat. But all other things being equal, we could see an interesting day tomorrow, and then dies. Nobody's gonna be on next week. There's no volume. So in fact, that's why the schedule for our move. And I've tried to also. One more comment about ORB. We're having an issue with NQ. It could be liquidity. We'll begin to focus on liquidity of NQ versus MNQ, with the mini versus micro. in the way we do things, which is look into data that comes in the dome and put it with a special formatting and filtering. We put it in a radar screen so we could see what kind of activity we have. We've been doing a lot of MNQ. We had a couple of issues with NQ, the larger contract, the 10X contract. And so now we're gearing up to take a look at it. In the meantime, we gave a stand down order today. In the Navy, stand down means that certain operations are on hold, put on ice. There's issue. There's issue with the aircraft, the engine, fuel, whatever, and ammo, whatever it is. So until we get that clear, we're recommending everybody trade MNQs. A little bit slower because of the season. This time of year, range is going to be compressed next couple of weeks. Nobody's going to be around. Volume is going to be low, and no NQs right now. Okay, until we get a handle on this, we'll probably have a day or two of work to do on it, and then like 3 to 5 trading days that the system trades as for analyzing it. What we're looking for is a special market texture to capture, but you can't predict that. It could be a first day. Okay, it could resolve itself first day, or it could be several days. Because we're not doing the efficacy of the system. We're not doing a huge back test or see how things go on a certain month. What we're doing is that this is a liquidity issue on NQs. We have a lot of people trading on it. There's no question. Close to 100 people are on it right now. Between the website, the people who use it as an EXC on their own trade station, and 2 system houses in Chicago, because it's tremendous success. And there's a ladder there. When you go up the ladder there, it shows against other systems. We were ranked 1 on 1 for 3 months and 6 months, and 2 for 1 year. We've only been there 5 months. We've killed it. How can you be number 2 for 1 year when you only been there 5 months? It's simple. You killed it. Yeah. I mean, you really killed all these other systems who struggled for 12 months, and we just leveled them. Now, we got into a little bump because we went sideways, just like we did back in July. Of course, we came and make it up in August, July, and September, and October. We got a little bumpy in November, again, because the moves were not early in the morning. It's ORB. It's opening range breakout. We're seeing a lot of our breakout the activity in the afternoon. The system doesn't trade in the afternoon. It's really geared up for the morning. And that's all. And so we have like double small losses. So people are getting a little bit upset. I said, listen, this is system trading. You got to sit back and let the system do. It has some rules. It'll keep you out of trouble. But if you get several days of bad, then that's like turtles. Then you don't have the stomach for it. You got to realize, turtles, you know, what do you call it, the trend following system. You have to have a stomach where you got a little loss, little loss, little loss, little loss, little loss. Like they add up, I understand that. And then comes a big one. Oh, out of the ballpark. Now, you maybe got a little bit too spoiled, where we're getting 1 or 2 of those a month. And yes, we all like to win maximum possible, but we cannot predict the texture. Texture is a 3-minute bar. Don't tell me you can predict it. Nobody can. If I knew how to predict it, I wouldn't be here talking to you. Why would I do that for? Yeah, so, you know, I will be out in the Caribbean with a 170-footer. So that's not happening. No, texture is difficult. Nobody can predict. By the way, this is wrong. It's not called river witching. It's a triple. Single stock futures are gone. By the year after Admiral left One Chicago, single stock futures were gone. They couldn't run it anymore. He was the fourth captain. Having said that, why don't we introduce the one and only Admiral Espo, Mark Esposito. His call sign was SPO. That's what we call Admiral Espo. If you want to follow him on Twitter, let me show you here. Admiral Espo. You go here and say Admiral. And for the moment I say 2 admirals show up, you know that, right? It's Admiral Tico or Admiral Espo. So let's go with Admiral Espo. There you go. That's his handle. Admiral _SPO. And whoa, you're picking up more people. That's very, very good, Mark. And he knows options like nobody. And for me, his teaming up with it's just mentoring only, and exclusively with Larry McMillan is a marriage of two worlds of both academics and following, and book. Larry has published more option books than anybody alive, and then they were very impressed by his resume and a couple of questions they asked him. They had some problems to solve, and the mind of Marcus was something else. So when it comes to options, so Marcus Anthony, as we call him, are you ready, Mark?
How's
I
that?
can't hear you.
Can you hear me now?
Oh, I do not hear you. I'm sorry.
How about now?
Let's see. I wonder why.
I look like I'm unmuted. My microphone is on.
Can anybody else hear Mark? Mark, we can't hear you.
Can't hear
Oh,
me.
you do. You can hear it. Okay. How come I cannot hear it? Okay. Let's make you a presenter, see if we still can hear you, because you have to record it. So otherwise, maybe you have to reset your audio. I don't know. That's why I said let's test this quickly. Okay, no worries. Let me make you the presenter. Okay. No, you organize it. Let me make you no. There we go. Pick up your machine now, okay? Excuse me. Can you speak, Mark? Okay, there you go. I can't hear anything.
Can you hear me now?
All right. Can't
All right.
hear. I can't hear you.
How about now?
Oh,
Hello, testing.
it shows you
Anybody
speaking.
hear
I
me?
can't hear you. You want to plug plug and unplug your headset, Mark?
Hold on, let me try again.
I understand, Michael, you can hear. Okay, then we can't record, but we'll give you a script. Go ahead. Nobody can hear it. I cannot record it for YouTube, for the purpose it was intended. But you can give your spiel.
How about now? Can you hear me? Hello, testing, 1, 2, 3. Hello, hello. Oh, the audience can hear me, but Fari cannot. Okay. Oh, it shows me talking. It shows Fari talking.
Okay. Mark, they're saying that they're hearing you. Fine, no problem, except I cannot. So.
And you can't hear me. Do I have the ability to bring over?
So making a presenter doesn't help. Let me do something different here. 1 second. Let me. Okay. All right. So let me do this. Let me take the control of the screen back while he's talking. Yes, Greg. I'm sure you can hear me too, but there's something wrong with the headset there. But that's okay. These are. Let me make myself a presenter for a second, okay, so you know what I'm talking about there. Yeah, so while he's talking, yeah, the audio did not help. Okay, I mean, making a presenter did not change his audio status. Okay, now here's what we're talking about there for him. There you go. This is the option strategist, which McMillan is a website. As you know, he's the high priest of our business. And we'll send the email out to that effect with that link. Okay. intensive option mentoring. And that's what, and there are different packages of different levels and all that. So you guys can think about it. Okay. For those who are active, remember, you got to be active with options so it makes sense and so on and so forth. Okay. Well, we'll send something to that effect to you guys in a minute. This way, also, at least Mark, people who watch the webinar can say, hey, what do I go to off the YouTube? Optionstrategies.com/intensive-option-mentoring, get ing, okay? Just like these words, except with dashes in between after optionstrategies.com.
Can you hear me, Fari? Still not. But everybody else can hear me. So,
And my goal,
Fari,
maybe Mark is saying that. Every other week or so, we'll have Mark here. We'll have a little what's called Option Corner, where you guys can ask some questions for him. Okay, well, we've got to make sure his audio works properly, so there's no problem. I know he does that because he does a lot of that. He's doing all that. Something is off here right now. That's not good. Any other comments, Mark? Are we done?
okay, so Fari is showing the page. Thank
Of
him.
course, I can't hear you.
Thank Fari for having me on here to show this. This is my latest venture. I was asked by Larry McMillan, who's done books and
Next
books.
time, Mark, we need to connect first. Yeah.
I'm sorry?
Before we start, yeah, before we start. Because I remember when we were doing it before, there would be issues sometimes. All right,
I
guys?
guess everybody can hear me, but you can't hear me.
I assume we're good here, right, guys? I can't hear us. So somebody else has to tell me if Mark is on.
Frustrating. Okay. Well, you see the page that our Fari put up. So I'm going to come on, join into the webinar every so often and pass along this information. Fari's going to send out an email blast of this information, which will have my contact information to reach out to me. If anybody's interested in what is a really intensive option mentoring sessions. If you look in the bottom there, there's several programs available. There's enormous amounts of material available. There's calculators available. There's newsletters that go out weekly. So there's a lot of material that's included in when you subscribe to a package and also subscribe to me doing a one-on-one mentoring program, which is either a complete 24 session or 2 different level programs at 12 sessions apiece. Sessions normally go 45 minutes to an hour. The mentor, myself, and the student figure out flexible times to work for them to be able to do the webinar, the mentoring sessions, and basically walk through A to Z, basically what I know about options trading, and that includes an elaborate spread background, and obviously, more importantly,
I just have no idea where we are.
Things have changed, so a lot of nuances to trading. So that next time we'll have this better, and I'll have more material, easier to see what we're doing, and be able to obviously be able to speak about it. So thank you, Fari. Nancy, if you're listening, could you let Fari know that I'm okay?
Mark, say something.
Yeah, Nancy will get to you.
Okay, now I'm hearing you. Finally. It's the news, not you. Yeah, sorry.
Oh, you can hear me now?
I can hear you fine. Yeah.
Now, can anybody else hear me?
Can anybody else can hear Mark? I think that never went away. It was the speakers here. This is a new soundbar I got because the other speakers went bad. I had them since 2003 in Robertson and what do you call it? Brooklyn Way.
So
that has got a funny way of hooking up. It made a problem. Sorry.
Okay.
Just
basically, what I was saying when you couldn't hear me was ran through what is available. I said we put together more information that would be going out in email
Right.
to help people understand what is available.
Mhm.
And there's, as you can see in the middle there, it says 3 superb programs to choose from. There's different mentoring levels, and obviously they are relative to certain pricing.
Right.
And there's a lot of information that is available to people. Once they've subscribed, they get.
You were starting this in January, right? This is just getting a pre-marketing done, right?
Yes, pre-marketing. And I've already had a couple students that have been working with me. I've had one individual that's strictly looking at certain spreads. I have another individual who's interested in doing earnings plays and what you call lotto trades in the option side. And he's also a
Wait a second. Let me sit down. He's coming in to do lotto trades?
Yes.
Okay, hold on. Let me sit down. I hope he's not listening to this. Okay. That is a tall order, young man.
Yeah. Yes. So, what I think the most important part of this is that they stopped mentoring back that February of COVID in 2020. And now the person that was running it, Stan Freifeld, decided to retire. They went through an extensive search to find someone, and they pulled my name out of a hat. And I've always enjoyed teaching.
Are you a rabbit?
Yes, exactly. I've always enjoyed teaching. As you know, we've done a lot of webinars with Homs Analytics, and we've done a lot of CDs that we burned that are available from even on the Homs Analytics website.
Right.
And this is exciting because it's one-on-one. And the best part about this is that people kind of mold what they want to do as far as their mentoring program.
Right.
Like the last individual I'm finishing up 12 sessions with, he strictly wanted to deal with time spreads and iron condors and how to apply them in the indexes and certain names. And he also wants to use time spread in big earnings plays like all the Fangam stocks. He likes to play with high volatilities the week of earnings week and see if he can capture the high volatility by being shorted and having something hedged against it. So he was an interesting 12 weeks. And another individual coming on now, this is the individual who wants to be able to trade what he calls those lotto trades. He wants to be able to buy options that are a little bit out of the money the week of expiry or the day before expiry and see if he can get lucky and it pops and he can make a gigantic return. So I'm going to teach him how to do back spreads where he can have that kind of opportunity. So, there's a lot of little nuances to trading that I've acquired in what I call my acumen of understanding what to do and how to do it because I've done it all. And I'm going to try and convey that to students that are very interested. It's a very high-end mentoring program. It's not something that you subscribe for little bits and pieces, only because Macmillan has been around for 35 years, and they offer so many tools and books and newsletters that are ongoing each day and each week and each month and each year while you're subscribed into the program. And you get all these, it's about $4,000 in mentoring tools that you'll have and newsletters and calculators, along with obviously my expertise and what I could explain and help teach you to understand and go through what I call simply my philosophy of trading and my mental philosophy of trading, which is very important, which a lot of times we hear you talk about the little things during the day, singles and doubles, never go for the grand slams. The market's here every day. You don't have to make it or lose it in one day. Stay small, stay strong. A lot of little things like that, why those are so important in the disciplines of option trading. So I want to thank Fari for having me on, and obviously we'll be a little more prepared next time, and I'll have a little better sheet to help have more information relative to this. You can't see, I was going to hope that you could see my email up there, but there is a contact number for me, which will be in the email that goes out by Fari, and it also has my email at the Option Strategist. It's very simple. It's Mark Esposito, all one word, at optionstrategist.com. So MARKESPOSITO at optionstrategist.com is how you can contact me at McMillan. So I want to thank Fari for having me on for my little cameo.
No worries.
And hoping that there are some very serious option folks out there that really want to delve into the nitty gritty of option trading and understanding what goes in my mind and how you could garner all of that 35, 40 years of experience into your acumen to being able to trade options and be successful. Thanks, Barry.
You got it, sir. Thank you.
Okay.
Guys, now I know it was my fault, but we'll fix it. The audio stuff. This is it just hit me at the last moment. Let me check the sound bar. It's very inexpensive. One piece, and it's what do you call it? It's off of it's Bluetooth, but apparently was not. I did not have it set up right. Okay, let me mute Mark and let's get to charts. Okay. We do need to refresh the data here, guys, because as you know, the settlement data has to come into the plant. Okay, this is what we have here. Oh, we might have to do that. Oh, we switched out. We logged back in. Sure. We could close down 24 handles. Obviously, the big shocker was yesterday, where it just went nuts, and it was high up there yesterday. The high there registered cash was 4,100, so it went through my 4010 instantly, and we had stopped out. Then we pulled back down. If you didn't get out, go and get out tomorrow. Okay. I think probably we'll have a little push down. I'm saying we may have a push up tomorrow. It's the reverse of what happened today because of FOMC. I still think Friday should be down. We're not getting out of this. This problem is not resolved. And we're getting a lot of bear market rallies. So very, very sharp. You get real excited, like, oh, we've seen the low, and then they dump it and take it below the previous low. So, or fairly close to it. So keep an eye. Look at this. They did that here too, and then dump. So it'll take a while. Making bottoms in a discount market is not going to be easy. Could be almost as bad as making a top. So I'm not good at making tops and bottoms per se. Nobody, I don't think anybody is. But over the years, I had some luck with V bottoms. But that's again is a market action. You don't know what that prediction is. Sometimes it works. When you hit the -3 sigmas, and it does actually puts a low in and reverses up. No guarantee this time. And of course, my biggest problem is that we have not seen the big havoc with volume and maybe with bathwater being thrown out the window. So we haven't seen that yet. So to me, it's still open. We pulled back a little bit of a divergence there. You can see the internals. This is advanced decline driven for NYSE. This is for NASDAQ. There's no breath here, and so on and so forth. Okay, what are we doing here? Doing a backup? Oh, just doing a backup. Shoot, guys are doing a little backup, so we can't change the screen. I can talk, but once it's done, we can go there. Yeah, it's going through this. The moment this is done, we'll jump. So let's put it on this end. Okay, this guy do his daily backup. Why is doing 550? I'll change that. Okay. All right. So volume, nothing there. No big down volume yet. Okay, like that. We'll look at the Lowry also on the perspective. As you see, that the CIDFs are negative. The CIs have crossed. So even right now, the pressure is still to the downside. Path of least resistance. Somewhere in here, I'm going to change my bias. Because if you're short here and it rallies up, then comes down, it may give you a 1 or 2 chance. You get a reprieve, but not too many. Keep that in mind. I think most likely the market senses, especially with the comments today from Fed Chair Powell, that the Fed is happy camper here with what they've done. They're going to monitor it, but They feel they've done the right thing. Numbers are coming down to confirm that. They're going to be data driven. So they're going to be in the loop. They're going to be in the game, but maybe the worst is over. For the market, I agree. For the economy, I don't think so. I think the economy will have the impact. We'll have time to show its impact, and that's how historically has gone. A market is a discounting mechanism. So when this thing bottomed here, you could probably bet that the economy will bottom about between 6 to 9 months from here. So, it's still running. Holy, I forget what that is. That's what, October? Okay, so 1, 2. So I think the economy will bottom around between April to June of next year. So there's still a lot of pain. That's why I think some of the real estate people here are really, really on the edge. Most of trader friends of mine that are here that I knew from Chicago, we kind of moved down here one after another, touching base, saying, "Hey, I'm down there. He's down there." They start moving. The wives are in real estate. The wives are stressed. It's just the way it is. 2 years ago, you couldn't find, even with the COVID, people were so active. Now it's a different ballgame. You know, a lot of us are in the cyclical business. As such, you have these cycles. It's just the nature of the beast. So can't change that. Of course, with oil going higher, there's a little more pressure on everything. So I just saw that on TV here. Crude up 8.6%. Yeah, so 8.6% in one day. I find that hard to believe. Okay, Dow closed 142 down. All right, so I'm waiting just for this to finish. No, I can't change the screen, guys. That's the problem. Give me a sec. Yes, we have a lot of components there. There's a lot of stuff in there. This is my main machine for analysis and output. That's the only machine that's actually on the internet for security reasons. There we go. Here we go. Performance reports. Go. Go to workspace. That's it. That's the last category. Get in the habit, by the way, if you use TradeStation, to back up your stuff. Keep about 2 to 3 weeks of it. Otherwise, you're going to get in trouble. Okay, we're done. All right, so we're going to get. If you need to restore something, you cannot guarantee yourself that the last duplication you did was good. Okay, you can't. The backup copy. All right, let's go to Canary in a coal mine. Okay, we did have a pop there. This was remember we said this is a problem with transportation dropping. Let me open this up if that helps you. There you go. I said this is dropping. This is a problem, right? And then, of course, we popped up and it stopped here. So at the 200-day, pretty much same picture, but you see the RTY or Russell. RTY is Russell futures. No, sorry, versus the index. You can see here, just the index there. Okay, there we go. This is the same. Yeah, there we go. You could see that this shows you can't hold on 200-day. So there should be additional pressure on Nasdaq. Okay, Nasdaq 100. That's my. We're down about 0.7. Yeah, the bump in a move in the afternoon was a little bit heavy. I got nicked on one account. The mistake was me. I had a little bit larger than I should. So, but that's always, as Admiral says, hindsight is 20/20. So I'll come back. It'll take me a day or two to come back on that. But maybe a day. Sometimes you're lucky, but you don't want to push it. I'd rather take the slower size to come back and over time, so I have more opportunity to navigate it. And of course, we hit a slow couple of weeks or so, then you trade nothing or very small. So if you put a rush on your trading in the market, you're going to lose. Market doesn't care what you need. The time you make money is when you don't need the money. It's just like banks. They'll give you money when you don't need it. When you go there and you want money, you have to have money. It's a very difficult environment. It's a scared money and you're needy. They're going to figure you out. Believe me, it does. And so my best trades always have been when I need it. So that's why I strive to be in that position. I'm very frugal. I try to keep my liquidity and the accounts. And remember, it's 49 to 1. So if you spend $100 out there, that's like spending 5 grand in the purchasing power because the leverage is 49 to 1. It's like 2%, putting 2% down and buying a house, except you have to sell it at lunchtime. Yeah. You buy in the morning, you got to sell it at lunchtime. But there are some buyers around. They raise their hands. So that's the concept that I do. So anyhow, I'm talking too much. My bad. All right, let's look at the trenders. As you know, that's the differential between the price and the 50 bar and 200 bar. 50 bars on top, 200 bar underneath. And let's do a count. 1, 1, 1. Okay, 4 positive, 1, 2. Okay, so we have 5 positive, 3 negative. Okay, it's getting slightly better. We're getting slightly better. Trans is the one that's positive on both. It is a leading indicator, so that's encouraging for the upside. So my thinking is, yeah, maybe we are beginning to see some relief here. Unfortunately, we'll only know that in the rearview mirror. So there's some guessing involved. Trend change always is expensive. You cannot. I don't know anybody who's called the trend change with no mistake. Okay, in between things are easy, between the bottom and between the top, because there's a trend involved. But that trend change, I don't know anybody. I know a lot of good traders, as you know, over the years. It's just difficult. So don't get discouraged if you get it wrong. Just keep it small, so you're not here what's called ROR, risk of ruin. People who do not compute ROR, which is it, if you've done any work on the optimal F, you'll see that you could come into a foray with a wrong impression, and then you're cleaned up that day, or you're fairly close to it, but you don't know you're close to it, and then you gotta get cleaned up that day. Just you know how Chicago cleans up clocks. You know, they come after you, they clean your clock, and it's done. Don't do that to yourself. So always keep the bet size small. I made a mistake here, but I immediately rectified it. I had to, for the time I ran out. So no panic. You say, hey, I'm a professional. I'm going to come back tomorrow. I'm going to give you the same attitude I had, a little bit better focus, a little bit less mismanaged or hurried because of just the way that these were moving. Actually, I think Chairman Powell was very supportive of the market. If you parse what he said, again, I'm not an economist, but as a trader, I've seen these things. I've traded many FOMCs with a sound in the background. I'm listening to it live. And also, I need to deposition myself for a question. Sometimes the questions are going to get into trouble. And so that means you cannot continue a position intraday. You got to, the question finishes, you should go flat. Except new question. I'm at one spot I didn't, and that's why it got me. Yeah. I failed my own procedure at that time. But it's done. FOMC is done for the year, and we're going to New Year. SV1 Momo. All right. No signal here, in my opinion. Very center oriented, not overbought or oversold. So data is not supportive of anything. Okay. Cash markets, future market just opened. It's pushing it down. Interesting. Okay. Here's the open at night. This is a screen I run at night. We want to come and check something. Oh, it's up 4. Okay, that's not bad. That's noise. So we got to look at tomorrow. Don't try that after hours. It just, it ruins your night. You have no rest. Volume is low. They can do really a big head fake on you, and then you know what happened. You come in the morning with a negative. No way to start the morning like that. So, okay, VIX VXN. They have not fixed this data. We keep on telling them. They don't get it. That's okay. Big reversal yesterday on the VIX. We had a pop there, and then even further down now. Okay, that's good, but we closed on. This is interesting. See what happened? We closed lower, and the VIX goes lower. Oh. Okay, it is what it is. All right. And we're getting a cross there on CI, which says the vol should be lowering. That's usually typically in line with higher markets. So yeah, I gotta gear up and make sure that we get long quickly. don't worry about 5 or 10 handles and then miss the boat. SQ is rising. Okay, hold on. Let me try. Hold on. Let me close my emails. Otherwise, they're gonna keep popping. Let me close it at the center here. There we go. All right. So, SQ is rising. I talked about the other day in the chat room. It's important to keep an eye on it, and I think that's the next shoe to drop. If this is rising, it tells me there's some activity on the bottom being put together by the big guns. I was talking to a pretty decent crude trader, now turned into S&P trader, because they closed it. He's down here, semi-retired, closed the pits, and now he's doing S&P. And I told him the next shoe is going to drop. He goes, "What are you thinking?" I said, "Well, SQ says lower from here, but we didn't have the today's data." And my thinking was that we got to take the previous low out, otherwise it doesn't count. That puts us at 3,500. If we do that, I think probably you're looking at a reality of some trades out down here, 3,200, maybe 3,000. Because that's how the big boys will operate. You'll buy very expensive options, which is SPX, but on nickels, for nickels or something, for a quarter or something, but deep out of the money, and then it can explode on for them. Too low yet, in my opinion, because if you take the center line, you take the median of the new range, if you will, it's 110 to 170. That's 60 handles. 30 minus that's a 140. Here's the median. We're not even there. So again, inconclusive right now, but we're gonna keep watching it. If it gets around 140, then we might have a different interpretation. Of course, by then you could see the sequentials also rise with it. And then we have to do our count. Right now, it's tough to read the count. Why? The levels are too low. Even though that hits perfectly, but levels are too tight. So we gotta wait. I noticed just recently in November, premium November, he made new lows, all-time lows. Okay. So, no stigma. Treasuries. Okay. Jeff Gundlach was on from a double line capital, which is the new and improved PIMCO. Pretty smart cookie. Of course, you have that size, it's a self-fulfilling prophecy anyway. We are lower, absolutely. His point was that this month we've had lower interest rate pressure as we're rising. Yes, it went to a new high. This is a 7-year high and low. Well, I'm plotting the low. 7-year high there. This is a 7-year high for the 5, 10, and 30. So you can see the value there. But we made a new high yesterday. So front end is rising, and then the back end is coming back down. So recession is going to be here. It's just a name of the game. You see the inversions. So if you look at almost 35.4, 35 even, 36.54, and then 4.2. Yeah, inversions here. So let's go to TD. Oh, by the way, these are support and resistance level on a monthly basis. And keep in mind, this run on the 5-year and 10, between period of August through October, yeah, was unheard of, unseen. Of course, on the 10-year, it actually included most of October. It went 3 months just unabated. And that's how we get into trouble. Such a strong run. So, and like a bond vigilantes came in, demanding higher and higher. Okay, the spread we're running right now. Long December, short March 23. That's our spread here. This is a 3 months big spread. This is a pretty good indication of what's going on in terms of volatility. By Friday, because this didn't expire yesterday, it's trading right now. Okay, you can see update. It's gonna expire next week, next Tuesday. Settle on Wednesday open. Excuse me. We have to roll. We're gonna roll on Friday. We'll be on the F contract, so we'll be F23 long, and then would be K, I believe K23, which is April. It'll be long January, short April for that our spread, and it's going to change our value a little bit. But needless to say, you could see where we're on a spread here. Now, as we go down, the highest put it. This is a little bit out of whack here. You can see. Okay, if you do this, you'll see that went too high. That dropped. This dropped here, but when it goes to zero, okay, if it goes up zero, it's the bottom. So if it goes up, we're gonna be. If the spread goes up, we're making a bottom, and that's a pretty decent tool to finding it, the bottom. But if it's dropping, that means there's up bias here. It's a little bit up bias here, wall wise. So, Larry's, no signal here today. It was all over the place around central line. During the day, this switches back and forth quite a bit. Actually, as each tick comes in, if the values are near neutral, it actually switches back and forth quite a bit. It's pretty annoying, actually. But I run an hourly, and so that at least maybe the last bar is changing, but the rest gets crystallized. And you could see it was all over the place on both ends, and neither of which hit any limits. Unlike yesterday, or was it unlike yesterday open, yeah, which went to 90%, which was this big gap. Of course, you would know. Gap up like that, they gotta sell it. There's absolutely gotta sell it. Why? The gap has to be filled. Look how the gap was filled. They filled it. You see the top there? That was very near the bottom of that. So gap got filled, and we're good. So almost same thing here. Okay. Not there. No, there was a gap there. So later on, it filled the gap initially. What's our conclusion here? I don't have any. It's again neutral. So kind of maybe a little bit down, but neutral. Okay, now this is a different problem. All right, this one went long. Remember, last week we were short with a delay, short a couple of days before. This one went long on Monday. No, this went long today. Oops, okay. We're still short on a Russell. This is EMD, which is mid cap. And I'm sorry, I'm a little bit tired, but it's been long days. Then NQ is short now. So it's a little bit of a mixed bag here. Sigma channel wise, we're on the upper end here. You can see it there. Except that we pulled back down here. Oh yeah, here we go. So we could challenge come down, but not much. If we're going to go down, we got to take this 39.38 out. That's the Sigma level on daily. That's this Bollinger Band. This is classical Bollinger Band, which is a subset of Sigma channels. But we have a base here that's been tested. So kind of a base down here to 11.5. So we shall see. Yeah, keep your areas as a band, so you have some room there. Do not go to a number. I say it has to be that. Give yourself a band because nothing is precise. This is the market. The market is always there. Remember that. As Admiral says, not Tico, no, Admiral Esfield. They ring the market every day at 8:30 in Chicago. Yeah, every day. So keep your ammo dry. Have a chance to fight another day. Let me take a look here quickly of our trade. Okay, yeah, that's where the cost is. All right. Again, our trade does not expire until Friday. But remember, Theta will kill us. Next Friday, not this Friday, 27th. But Theta will kill us. And we're not going to put a trade on over between now and first of the year. I'm just going to stay flat with it. We may keep the bias. We'll see how the market actions tomorrow and the day after. Or most likely we just go flat. Yeah, not to worry about it. It's one trade. So. it worried me yesterday, but it's already come down the grid for us. So a little more push down. I'm cool. Yeah. And we go forward. I used to be very, very agitated for every trade. You get comfortably numb. You have as more numbers come in and you have more wins, it shows your resilience, and you learn, hey, I will do this. I can do this, but this is how. First of all, is not get cagey and get upset on every trade that you close that become a problem. I'm talking about long-term trade. I'm talking about not futures. I'm talking about options or underlying SPY for market timing. You got to realize you're going to have some close calls and you're going to have some good runs. The key thing is to stay consistent, follow your procedures, and so to speak, a checklist, for example, and keep a stock of where you are. Keep an eye on the target. That's important. Why is it doing watches here? I have no clue. Okay. All right. Now, where are we? Is this tonight? Yes, it is. Okay. Yeah. Okay. It's 14. Okay. So number has come in. Remember, this takes a little bit of time to show up because by 6 o'clock we were fine. Like at 4:15, you look at it, you can't see a number there. It shows. So be careful. You look at a date. Okay, right up here. Where's my mouse? Oh, there. So you look at a date up here. Make sure that's current, and we're running 20 and 50. Separation is huge now. So this probably could say, hey, if we can get past 55, we're gonna go up. Remember, I'm saying 65. Remember, yeah, we're past 55. Remember, in this realm, 55 through 45 is a kind of neutral setting. We punch through, we test it, we're going up. So I think we're going up, but we're only one bad news away. When you have something crazy to do, like a comrade Putin involved. So you just gotta be careful. If you're making a bet to the upside, I would put a small bet on. I'm still in my odds in my head would be some chance to go upside, but probably a much bigger chance for it to have a hiccup and go downside. So be careful. Yeah, always trade with the stops when you go through these kind of commotions. Let's see. Is there anything else I have to show you? Work continues on our premier product, but I'm afraid we have decided that there's no way we can put it out there for public use, which is a Tiger Shark. And it's not finished. It's got a couple more things to go. There's some graphics work that's left. The problem is that we're short-handed. Now, I'm not into going hiring people. I got a lot of offers. I can do this. I can do that. I'm not interested. I usually want to pick the person. I don't want somebody coming to me because I don't know what their intentions are. And typically, I want the first one as collateral anyway. Talking about pretty decent size of work and proprietary work. So years and years and years of my work in terms of this indicator built up and testing and so forth. So I'm not keen on bringing another programmer in. I want to work with the team I have because they've been with me for years and years. I mean, they've been with me decades. So I want to stay with them. And there's a loyalty involved. But we got to get there. We have this thing with the ORB done, then I will switch back to Tiger Shark. Okay. And yes, it is. And here's the problem. This is the reason we're not going to publicly share it. It needs a very large account. Tiger Shark is made for a fairly large account size, like $500,000 to $1.5 million in futures. So it's really something between $25 million notional to about $125 million notional. Remember, it's a 49-to-1 leverage. So it's not really set up for a small account. You will have no benefit. Why? It's a continuous fire control, which becomes a self-fulfilling prophecy. Yeah. It goes after a situation, it starts killing it by continuously pounding it. For that, you need size. Yeah. And you can't panic because now you're top heavy. Yeah, you're semi-pregnant, so we have to be careful. We're not trading one or two MNQ or I'm just, let me put it another. We're not doing 5 or 10 MNQs or 1 or 2 NQs. It's just fairly decent size, yeah. I traded last week at one point something like 80 plus. At one point was NQs in one trade, and we built it at 5 at a time. So it's almost like at 16, and it wasn't against us. You don't trade. You're not averaging down. You're pushing it. Yeah, you're adding to a winner. You can't add to a loser. So it was like 16 crunches went in, but it shows all of those. I mean, it's a complicated thing, but also it shows that where it's optimal to add. That's all built in. Yeah, a lot of work, but you know what? That keeps you young. I'm not gonna sit down and watch TV. Are you kidding me? All right. Any questions for me? Sorry about mishap this morning this earlier today on the audio, but yeah, I kind of knew that things could be a problem. Hold on, 1 second. Anything else, guys? Okay, let me get this call. We'll talk to you later on. Happy Christmas, Merry Christmas, and Happy New Year. Lou?
Hello, may I please speak with Byron?